Welcome back to the deep dive. We're here cracking open another stack of fascinating sources to really arm you with some insights.
Glad to be here.
So today we're plunging into an idea that's, well, it's as old as strategy itself, really, but it's profoundly relevant for anyone navigating competition today. It's this concept that the most profound victories aren't always won on some visible battlefield.
Right. Not the big, flashy confrontation necessarily.
Exactly. In fact, true mastery often means making victories seem, well, easy, almost inevitable, or maybe even avoiding the fight altogether.
Yeah, we tend to cheer for that dramatic clash,
Yeah.
the head-on thing.
We do.
Yeah.
But what if the real genius lies in triumphing long before the first shot is even fired,
Yeah.
through superior strategy, better positioning?
It's a principle you see echoed across centuries, famously articulated by military strategists like Sun Tzu.
Ah, yes, the art of war.
Exactly. He taught that the supreme art of war is really to subdue the enemy without fighting.
Subdue without fighting, that's the core, isn't it?
That's the core. And look, this isn't about shying away from challenges, not at all. It's about achieving your objectives so skillfully, so comprehensively, that direct opposition just becomes, well, unnecessary or maybe totally ineffective.
So you're saying it's about being so prepared, so strategically placed that your success feels like an unalterable truth.
Pretty much. It's like the victory was baked in from the start because of how you set things up.
And that's exactly what we're after today in this deep dive. For you listening right now, whether you're navigating a complex business negotiation or maybe plotting your next career move or even just trying to understand the intricate dynamics of power and influence.
But you're everywhere.
Right. This session will pull powerful insights from a really diverse stack of sources. We're talking everything from finance to philosophy, leadership principles to personal development stuff.
Yeah, real mix.
Our mission today is basically to show you how leverage, how foresight, and maybe a deep psychological understanding of human nature, how these can become your greatest assets.
So our core mission, really, is to distill those fundamental principles, the ones that empower individuals, organizations to gain that decisive advantage.
Okay.
We'll explore how they manage to win without fighting, quote unquote.
Yeah.
How they do it by intelligently shaping their environment, understanding the nuances of human behavior, and meticulously preparing for outcomes way before they even happen.
It's about making your victory look not just easy, but almost inevitable. Like it was always going to happen because of your planning.
That's the goal, superior preparation and positioning.
All right, let's start unpacking this. This is a compelling idea. Part 1, the power of strategic positioning and foresight. And we'll begin with 1.1, shaping the playing field, where to play and how to win. At its heart, this concept suggests success often stems not from fighting harder, but from carefully defining your competitive space, establishing an advantage before any direct conflict really even has a chance to flare up.
It's about choosing your battleground wisely, or maybe creating a whole new one.
That's a crucial distinction, isn't it? Instead of just jumping into an existing market and, competing on the same old terms.
Right. The most astute players, they often redraw the map entirely. A perfect illustration of this comes from P&G's Olay brand.
Olay, right. So when they set out to compete in the anti-aging skincare market, they were facing these huge, well-entrenched prestige brands, the ones in high-end department stores.
Formidable competitors.
Totally. And if I recall correctly, they explicitly chose not to go head-to-head there in that arena.
Exactly. Instead of trying to, out Chanel, they made a highly strategic where-to-play decision.
Okay.
They basically carved out what's known as the masstige segment. It's sort of a blend of mass and prestige.
Masstige. Okay,
Yeah.
I like that. So what did that look like?
Well, they positioned Olay products with a genuinely premium feel, premium efficacy, but they placed them squarely in, like mass discount stores, drug stores, grocery stores, places people shop every day.
Ah, so not the fancy department store counters.
Precisely. This was kind of a stroke of genius, really. They aimed for a new, growing segment. Consumers who wanted quality, wanted results for anti-aging, but maybe weren't willing to pay those department store prices.
Yeah.
Or maybe they just didn't shop in those environments.
So by consciously rejecting the traditional prestige channels.
Yeah, they defined a unique battlefield, one where they could offer compelling value without directly confronting those established luxury brands on their own turf. They essentially created a new category where they could, well, dominate.
That's a textbook example, isn't it? Winning through smart positioning, not just brute force confrontation. They found an unmet need, a different channel.
And captured market share the prestige brands just weren't set up to serve.
But P&G didn't just do this once, right? I remember reading about their approach to fine fragrances, which was traditionally a really tough business.
Oh yeah, notoriously difficult. The fine fragrance industry often operated on what our sources call a push and churn model.
Cushion churn, what does that mean exactly?
Well, think about it. New fragrances were typically launched around fashion cycles, right? Heavily promoted for, say, holiday shopping.
Right, the big Christmas push.
Exactly. And then they often declined pretty quickly by spring. It became sort of a secondary business for many companies focused on rapid seasonal turnover. Just a race to push products onto shelves, hoping for quick sales.
Okay, so very short-term focused.
Very. And P&G looked at that model and basically said, hang on, we can do this differently. They completely inverted it.
How?
Instead of starting with what the industry was doing, they began with the consumer. They actually invested in hiring internal master perfumers,
Right.
which was pretty revolutionary for a CPG company back then.
Wow, okay.
And they tasked them with designing fragrances against specific articulated consumer wants and needs. Then they partnered with the top fragrance houses to bring these concepts to life.
So starting from consumer desire, not just industry trends.
Exactly. This consumer-centric, concept-led approach, it fundamentally shifted the whole dynamic.
In what way?
It made P&G the preferred innovation partner in the fragrance world. They started winning numerous awards. They weren't just participating in the industry anymore, they were actively reshaping its rules, moving from that product push model to more of a demand pull model, driven by genuine consumer insight.
So they won by making themselves indispensable through insight, not just by, outspending competitors in a flawed system.
Precisely. Winning without fighting the old way.
That really builds on this idea of defining your own battlefield, becoming indispensable. It connects nicely to another concept we found, becoming the obvious supplier of choice.
Ah, yes, from crossing the chasm. That's crucial for those pragmatist customers.
Right, the mainstream buyers, the cautious ones who want proven solutions. The source emphasizes you need to embed yourself deeply within their industry.
And what's fascinating there is that it's often not about the grand gestures, right? It's about sustained strategic presence, quiet persistence.
So what does that look like practically?
To become that obvious choice, you have to be deeply conversant with your customers' issues. You need to genuinely understand their pain points, speak your language.
Okay, more than just surface level.
Much more. You need to show up at their industry conferences, be mentioned in their trade blogs, ideally already be installed and successful in other similar companies within their specific industry.
So proof points are key.
Absolutely. Developing specific applications tailored to their needs, forming alliances with other complementary vendors, all of this reinforces your position as the logical integrated choice.
So it's not about being the loudest or having the flashiest marketing. It's more about this quiet, persistent integration, building trust and relevance over time.
Exactly. This kind of preemptive embedding makes you the natural, undeniable choice. It often minimizes the need for those head-on battles because, well, you're already deeply entrenched. You're part of their ecosystem.
And for you, listening, this isn't just about big corporations. It's about identifying your niche, truly understanding your audience's deepest needs, and then systematically building that presence, that reputation that makes you the indispensable, natural go-to person or solution in your field.
Making direct competition largely irrelevant because you've already won the positioning game.
Which leads us perfectly into our next discussion. 1.2, building lasting advantage through strategic investment.
Yeah, this is key.
The core idea here is that truly enduring success, the kind that lasts, is forged through consistent, deliberate actions and investments, things that over time create positions so strong they become virtually unassailable. We often call these moats, right?
Exactly. Economic moats. And these investments, they might not yield immediate gratification. They're often not sexy in the short term, but they are foundational.
This is where it gets really interesting, especially when you look at a company like Amazon.
Oh, definitely.
They've explicitly pursued this strategy of just huge investments in consumer benefits. Things like perpetually lower costs, that massive selection, incredibly fast delivery, we all experience it.
Right. But the real genius isn't just doing those things. It's how they've managed market perception and investor expectations around it.
Explain that.
Well, Amazon has essentially trained Wall Street, and by extension the whole investment community, to expect higher growth rates but coupled with lower profits.
Which is kind of counterintuitive for most public companies.
Solely. And this wasn't accidental. It was a deliberate strategy, communicated consistently through their reports and famously Jeff Bezos's annual shareholder letters.
Okay.
This unique investor relationship, this understanding, has allowed them to consistently plow massive amounts of capital back into the business, effectively, as the source says, digging deeper and deeper moats around their operations.
So it's a long-term play.
Absolutely. This long-term patient view prioritizes market dominance and building that incredible consumer value over just hitting quarterly profit targets. And that creates an insurmountable position for potential competitors who simply cannot match that scale of sustained, focused investment.
It's a victory won by out-investing patiently over time, not just out-fighting in the moment.
They're playing chess while others are playing checkers, in a way. A generational game of building an impenetrable fortress versus a quarterly game of profit maximization.
And that stands in such stark contrast to many of the entrepreneurs from the dot-com bubble era.
Oh, completely. As we learned, many of them were seeking quick riches, right? Sometimes filing to go public with little more than a business plan, hoping to cash out fast.
Yeah, a very different mindset.
Almost the polar opposite of Sam Walton's patient, incremental approach with Walmart.
Right. Walton started with just a single dime store back in, 1945?
Yeah, and opened his second store 7 years later. He meticulously built his empire step by step for a quarter of a century.
25 years. That's patience.
Incredible patience. It was this slow, deliberate expansion before he hit what our sources call breakthrough momentum. Then suddenly, it was over 3,000 stores, $150 billion in revenues.
And that led to their famous hedgehog concept.
Exactly. It emerged as a natural evolutionary step from that persistent, focused action. A deep, singular focus on what they did best, providing everyday low prices, particularly in rural and suburban areas where others weren't focused. Their strength wasn't in rapid speculative growth. It was in relentless, consistent execution over decades.
That's a marathon, definitely not a sprint. It shows the quiet power of just persistent, deliberate effort. But so many companies, and maybe even individuals, fall into this pervasive trap here, don't they? This idea of marginal thinking.
Oh, absolutely. And this raises a profoundly important question highlighted in sources like, how will you measure your life? How often do companies, or even us as individuals, make the mistake of focusing only on the immediate tangible costs and the marginal upsides of an investment, while completely ignoring the enormous, often unseen costs of not investing?
Give me an example.
Okay, so a company might forego investing in future innovation because their existing products are, perfectly acceptable. They're making money now. They assume the status quo will last forever.
But it rarely does.
Exactly. This short-sightedness almost inevitably leads to failure down the road when a competitor does innovate and disrupts the market. The cost of inaction, the cost of not making that strategic investment, is almost always far greater in the long run.
It's a fundamental failure to grasp the long-term consequences of just staying put, assuming your current advantage will magically persist without continuous effort.
Yeah, inertia is dangerous.
So for you listening, this is a really critical takeaway. What moats are you diligently building right now in your career, your business, your personal development?
Are you maybe falling into that trap of marginal thinking, neglecting crucial long-term investments for, fleeting short-term gains?
Are you proactively protecting your future by continuously investing in your capabilities and your strategic position, making yourself increasingly difficult to dislodge over time? It's about future-proofing yourself.
Good questions to ask.
Definitely. Okay, let's shift gears slightly. Let's delve into 1.3, capitalizing on market dynamics and information asymmetry.
All right. Interesting stuff here.
The core idea, as I see it, is that a deep understanding of the underlying market structures, even the ones that seem irrational or hidden, can unlock significant opportunities for strategic advantage.
And often allows you to win without a direct fight, simply because you see things others don't. You have an information edge.
This is beautifully illustrated by Priceline's acquisition of Booking.com. That was a real M&A masterpiece, wasn't it?
Absolutely. Most U.S. consumers, thanks to those memorable William Shatner commercials.
The negotiate.
Exactly. They associate Priceline primarily with name your price airfares. But the hidden truth, a significant information asymmetry, was that nearly 2/3 of Priceline's actual revenues were coming from hotel bookings outside the U.S., largely through Booking.com.
Wow, 2/3. That's huge and not obvious at all from their main U.S. marketing.
Not at all. This strategic acquisition allowed Priceline to achieve a really lasting advantage in the global hotel booking market. They didn't win by just outcompeting Expedia or others in their original U.S. market. They strategically expanded into this less obvious, incredibly profitable international segment.
And that foresight paid off.
Handsomely. In 2015, Priceline actually boasted the highest 10-year return of any stock in the Fortune 500. That's a testament to understanding and capitalizing on those overlooked market realities.
It truly highlights how a deep, nuanced understanding of market realities, even those not immediately apparent, can unlock massive value. But sometimes, even the established financial models, the ones we're sort of taught to trust, can mislead us.
That's a really crucial point.
I'm thinking here about the capital asset pricing model, CAPM, and its measure of volatility, beta.
Right, CAPM and beta. While they are indeed strong predictors of returns that fluctuate with market cycles, basically measuring how much a stock moves relative to the market, our sources reveal something interesting. They're not a reliable predictor of long-run future returns.
Not reliable long-term?
Yeah. And ironically, if low beta stocks, the less volatile ones dependably earned returns as large as high beta stocks, beta would actually be more valuable as a predictive tool.
That's a bit of a paradox.
It is. And it points to the critical need for thinking beyond just the standard models, especially when they encourage this sort of illusion of predictable returns that often doesn't hold up over the long haul. You need critical thinking.
And we saw this play out dramatically during what's often called the lost decade for stocks, right? The 2000s.
Oh yeah, brutal period for many investors.
The S&P 500, astonishingly, actually lost an average of 6.5% per year over that decade.
Which is shocking when you think about it. And it wasn't because companies were performing poorly or dividends were weak. Dividends were actually quite strong.
So what caused the loss then?
It was because price earnings, multiples plummeted, and dividend yields rose. The valuation relationship fundamentally changed.
So the market just decided to value earnings differently.
Exactly. It perfectly underscores how these dramatic shifts in fundamental valuation relationships can completely derail returns, even for seemingly strong underlying investments. Just following trends or relying solely on one model can be disastrous if you don't grasp the deeper dynamics and potential shifts in market perception.
It highlights that the market can, in fact, be, as Michael Milken famously observed, grossly inefficient in valuing everything.
From the land a company owns to the pension fund it creates.
Yeah.
It creates both huge risk and immense opportunity for those who can look beyond the surface noise.
It's a powerful reminder that what often appears to be an efficient, rational market can be anything but.
Right. Our disbelief in secrets, or hidden value, often leads us to this unwarranted faith in efficient markets.
Yet, financial bubbles like the internet bubble in '99 or the housing bubble in 2005, they're vivid demonstrations of extraordinary inefficiencies, aren't they?
Absolutely. The market can be prone to collective blindness, ignoring fundamental risks or overlooking value for long stretches.
So for you, this really means looking beyond the superficial narratives, questioning the popular opinions, digging deeper.
What hidden dynamics, what overlooked assets, what mispriced opportunities could you identify and leverage? What common assumptions, especially in your own field or industry, should you maybe rigorously question?
Good challenge. Now let's pivot. Let's move into part 2, the art of avoiding direct confrontation and managing risk.
Okay. Shifting focus.
Here, we'll explore how true strategic advantage often comes not from fighting the expected battle head-on, but by making these preemptive moves, structuring agreements cleverly to mitigate risk, often winning before the fight truly begins.
Getting ahead of the game.
Exactly. Let's start with 2.1 preemptive moves and calculated risk.
The central idea here is that winning often involves making strategic moves that secure an advantage or fundamentally mitigate your risk before a direct fight can even fully materialize. It's about being several steps ahead.
Okay.
A really compelling illustration comes from Den of Thieves, involving Robert Siegel during that intense Unicol takeover battle.
Ah, yes. The insider trading sagas. What did Siegel do?
Well, Siegel, apparently armed with insider knowledge that a tender offer was definitely going to proceed, didn't hesitate. He immediately suggested selling call options or buying put options to effectively lock in a huge profit on half their stock position.
So not fighting for control, but locking in a financial win.
Precisely. It wasn't a confrontational move in the traditional sense of, vying for control of the company. It was a proactive, calculated financial maneuver. He secured a guaranteed win more than recouping potential losses by strategically leveraging information and financial instruments. He essentially exited the battle with his profits secured before the main conflict even peaked.
That perfectly demonstrates structuring your position to win, regardless of the ultimate outcome of the bigger conflict, taking risk off the table.
He took a calculated risk that, because of his information advantage, virtually eliminated the risk for him. Similarly, let's consider Peapod's ingenious strategy. Remember Peapod, the early online grocer?
Vaguely, yeah. What was their move?
Their strategy was to deliver other products to current customers and become a learning broker.
A learning broker. What does that mean?
Okay, so instead of trying to compete head-on in totally new product categories, say home improvement or office supplies, Peapod decided to leverage its existing customer relationships and its established online ordering system.
Okay. Use what they already had.
Exactly. Their goal was to gain entry into, for example, the computerized inventory lists of home improvement centers. The key here was that their existing knowledge of their customers and the customers' trust and familiarity with Peapod would immediately transfer to these new virtual aisles.
Yeah, so Peapod remains the interface, the trusted source.
Precisely. And once again, it would be Peapod, not the underlying hardware store or office supply chain that would control the direct relationship with the customers. They became the arbiters of information, the trusted interface, effectively creating a new service layer on top.
Which allowed them to avoid direct competition with the actual suppliers of those new products.
Right. They controlled the relationship, the data, the customer experience, which is an incredibly powerful non-confrontational advantage. It allowed them to expand their offerings without needing to fight for market share in these entirely new verticals. Super smart.
That is clever. Controlling the gateway. And speaking of powerful, non-confrontational wins, let's look at one of Warren Buffett's legendary moves. His free play when he rescued John Gutfreund at Salomon Brothers from that takeover attempt by Revlon.
Oh, this is a classic example of Buffett's strategic genius. Pure financial maneuvering.
So he didn't just buy stock, did he?
No, that would have been too simple, too direct perhaps. He lent Salomon money, but he did it by purchasing a special kind of security, a convertible preferred stock.
Convertible preferred. Okay, break that down.
Critically, he secured a 9% interest rate, which was a very good return on its own back then, and he got the option to convert that preferred stock into Salomon common stock at a fixed, favorable price before a certain date, 1996 in this case.
Okay, so he gets interest plus an option.
Exactly. This unique structure effectively gave him what the source calls a free play.
A free play? How so?
Well, think about it. If Salomon faltered, if the company struggled, he still collected his guaranteed 9% interest. A safe, steady return on his capital, he'd be fine.
Okay, downside protection.
Right. But if, as he likely predicted, Salomon recovered and its stock price went up, he could then exercise his option, convert his preferred shares into common stock for potentially huge profits, as much money as if he'd bought the stock outright at a much higher risk point earlier.
So, heads he wins, tails he doesn't lose much.
Pretty much. He made a very safe bet for himself, preserved Gutfreund's job, benefited Salomon by providing needed capital, and ultimately won big for Berkshire Hathaway, without direct equity commitment initially or engaging in the messy, high-risk battle for company control. It was a perfectly hedged, risk-managed victory achieved through clever financial structuring.
That really raises an important question for you, the listener, doesn't it? How can you anticipate potential conflicts or market downturns and structure your own actions, your agreements, your investments to achieve your goals with minimal direct exposure?
Or ideally, with a maximum guaranteed return, creating your own free play scenarios. It's about foresight and strategic structuring, not just brute force or direct engagement. Can you find that asymmetrical bet?
Building on that, let's explore 2.2, the illusion of battle, when conflict isn't what it seems.
This is interesting. Perception versus reality.
Exactly. Sometimes what appears to be a direct challenge or an insurmountable obstacle is actually maybe an opportunity in disguise. Or perhaps the perceived fight is based on fundamentally false assumptions.
The Washington Post strike in the 1970s offers a really striking and maybe somewhat humorous example of this.
Okay, what happened there?
During a Pressmen's Guild strike, many of the Star reporters genuinely intended to remove their excellence, as the source puts it. They believed the paper simply couldn't function, or at least couldn't maintain its quality, without them. They felt their value was immense, unassailable.
I thought they were indispensable.
Totally. And here's where it gets really interesting, and frankly, probably a bit humbling for them.
Uh-oh.
Their excellence was remarkably unmissed.
Ouch. Seriously.
Seriously, according to a survey conducted by the Washington Star at the time, a majority of readers saw absolutely no change in the quality of the paper during the strike. And in a surprising twist, some readers even thought the Post was better.
Wow. That must have stung.
You'd think so. This incident revealed a profound disconnect between the perceived value of the striking reporters and the actual value delivered to, or at least perceived by, the readership. The paper effectively won the strike without its core staff because the battle the striking reporters thought they were fighting just sort of dissolved around them. It was based on a false premise of their own indispensability.
That's a powerful lesson in questioning assumptions, isn't it? Not just about the value of others, but maybe about your own perceived value and how the market or the situation truly perceives it.
Absolutely. Similarly, the stock market itself often presents convincing illusions, like its famous anti-peristasis.
Anti-peristasis, that sounds dramatic. What is it?
It's a somewhat archaic term, but it describes the market's tendency to reverse itself, then reverse the reversal.
Hmm.
It's actually just when things seem to be settling into a predictable pattern, they often abruptly and unpredictably shift again. Volatility breeding more volatility sometimes.
Okay, so unexpected reversals.
Yeah. This anti-peristasis was particularly evident during that dreadful period for stock market investors in the early 2000s, the so-called lost decade.
How so?
Well, for example, what seemed like a hopeful rebound after a big two-day decline back in 1929 was noted as being ominously comparable in pattern to a later rebound that wasn't followed by a further slide. The market, in its complex gyrations, often appears to follow patterns that can be deeply misleading if you take them too literally.
So appearances can be deceiving. Historical patterns don't always repeat predictably.
Exactly. What looks like a battle unfolding in a certain familiar way can quickly change its nature. It requires a deeper understanding of the underlying dynamics rather than a superficial reliance on past patterns or perceived threats. Don't fight the last war.
And then there's the fascinating case of Drexel Burnham Lambert and Michael Milken's almost legendary cult loyalty he fostered.
Ah, the junk bond king and his operation.
Milken, as the sources detail, essentially drowned his people in money. Employees on his Beverly Hills junk bond trading floor received these unexpected, life-changing millions, creating an almost fanatical devotion.
Yeah, it certainly fostered this unique cult atmosphere where employees felt intense personal gratitude, believing, we owe it all to one man.
So that created immense internal strength, cohesion, a fiercely loyal unit.
Absolutely.
Yeah.
But it also fostered a very insular environment. It created a situation where, from the perspective of Milken's powerful operation out in California, the main firm back in New York said no to everything we did.
So friction between the parts.
Significant friction. It suggests a victory of sorts for Milken's group, built on this internal unity and self-sufficiency that essentially isolated itself, culturally and operationally, from the broader corporate structure. It was a battle for influence and control, won by creating an almost entirely self-sufficient, fiercely loyal entity within a larger, more traditional structure, a state within a state.
So for you listening, this really means rigorously questioning your assumptions about what truly constitutes a battle. Is the perceived threat actually real? Or is it maybe an illusion built on outdated ideas, ego, or misinterpretations?
What happens if you simply refuse to engage in the expected fight? Or what if your perceived adversaries are fighting a battle that, for all intents and purposes, no longer exists or doesn't matter to your core objectives?
Sometimes the most powerful move is simply to step away from a conflict that isn't actually real or isn't worth fighting.
Or to redefine the terms of engagement entirely.
Let's navigate now into our final section of Part 2. 2.3, Navigating Turbulent Environments and Technological Shifts.
Okay, dealing with change and disruption. Crucial today.
Absolutely. The core idea here is that periods of intense change and technological upheaval inevitably create both resistance from the old guard, but also radical new opportunities.
And those who can adapt, innovate, and skillfully ride the wave of these disruptions can achieve dominance without necessarily engaging in the old paradigm battles. The landscape itself shifts.
Carlota Perez's model of technological revolutions is particularly insightful here, isn't it?
Oh, very much so. She describes these revolutions not as just single inventions, but as a cluster of clusters or a system of technology systems. Think the steam engine, electricity, the internet.
Big systemic shifts.
Exactly. And crucially, she notes that they initially face inevitably unfavorable and even hostile environments.
Why hostile?
because these new systems represent such a radical departure from accepted ways of doing things, from established practices, from vested interests. There's inertia and
Oh,
resistance.
that makes sense. And her take on financial bubbles is fascinating too.
Yeah, she argues that major financial bubbles were interpreted as massive processes of credit creation necessary to install each technological revolution.
So bubbles aren't just mania, they serve a purpose.
In her view, yes. It's the bold and sometimes reckless financiers who provide the essential, maybe excessive capital that supports the entrepreneurs driving these changes, often against the tide of established industries. It suggests this grand pattern of radical change, driven by disruptive tech and fueled by these financial surges, rather than just direct, old paradigm competition. The whole game changes.
It's about recognizing that larger wave, understanding its trajectory, and positioning yourself to ride it, rather than fruitlessly fighting against the current of innovation.
Precisely. Now, sometimes the fight is more about perception and psychology. Consider the British pound crisis back in the 1960s. This illustrates a kind of psychological maneuver in economic warfare.
Okay, what happened?
Prime Minister Harold Wilson attempted to use rhetoric as a weapon to keep the value of the British pound, sterling, strong during a currency crisis.
Fighting with words.
Essentially, yes. He delivered this powerful speech, warning currency speculators to be prepared to pay the price for their lack of faith in Britain. All the while, he elaborately, carefully avoided using the word devaluation, even though many expected it.
Managing expectations through language.
Exactly. This verbal volley, this strategic use of language and carefully managed perception, it temporarily stabilized the pound without major direct intervention. It bought time, influenced sentiment without having to engage in a full-blown economic policy battle immediately. He was fighting with confidence-building words, not just interest rates or reserves.
And we see a strikingly similar dynamic playing out more recently, right, in the financial sector, with how incumbent banks responded to the rise of fintechs.
Oh yeah, that's a great modern example. Initially, there was significant skepticism, even dismissal, towards these fintech startups and their disruptive potential. They were seen as a direct threat.
A head-on competitor.
Right. However, many incumbents later recognized the strategic opportunity rather than just the threat.
How do they shift?
Well, instead of just trying to beat them in a direct innovation war, which can be costly and slow, big companies like Charles Schwab and Vanguard took a page right out of the win without fighting playbook.
What do they do?
They launched their own robo-advisors, Schwab's intelligent portfolios, Vanguard's personal advisor services, competing directly with the startups like Betterment and Wealthfront.
Okay, so they matched the offering, but how did they win?
Here's the clever part. They shrewdly leveraged their massive established sales channels, and, crucially, they could automatically enroll or easily market to their huge base of existing customers into these new services.
Leveraging their existing scale and trust.
Exactly. And because of that, they grew assets under management in these new robo-services significantly faster than their fintech competitors, despite not having been first to market. They effectively absorbed the threat by adapting, integrating the new tech, and deploying their own formidable existing infrastructure and customer base.
Rather than just engaging in a direct, costly, feature-for-feature fight from scratch.
Right. They skillfully turned a perceived threat into an opportunity. A classic winning without fighting move that showed remarkable adaptability.
This really raises an important question for you listening. How can you anticipate these kinds of shifts in your own world and adapt your strategies?
How can you turn potential threats into opportunities? Or maybe even integrate disruptive forces into your own strategy, circumventing direct conflict and emerging stronger.
It's about observing the wider ecosystem, isn't it? And finding those pathways to success that redefine the terms of engagement rather than just accepting the existing battle lines.
Well said.
Okay, let's shift our focus now for the final part, part 3. Psychological advantage and understanding human dynamics.
This is where it gets really subtle, but incredibly powerful.
I agree. This part is all about the power of knowing what makes people tick, understanding human nature, and how you can achieve your goals by working with, rather than forcefully against, those tendencies.
Using psychology as leverage.
Exactly. We're starting with 3.1, leveraging human nature and persuasion.
The core idea here is that understanding how people think, how they react, what motivates them, it's absolutely crucial for gaining influence and achieving desired outcomes without resorting to direct force or overt conflict.
And who better to learn from than Benjamin Franklin? He offered some remarkably timeless wisdom on fundraising, which is all about persuasion.
Yeah, his advice was simple but brilliant in its psychological depth.
Break it down for us.
Okay, first, he said, apply to those people you know will give. Get some easy wins. Build momentum.
Start with the sure things. Okay.
Next, approach those you are uncertain about. But, and this is key, show them the list of those who've already given.
Ah, social proof. Leverage the crowd.
Exactly. It subtly pressures them, makes them want to be part of the group. And finally, he said, do not neglect those who you are sure will give nothing, for in some of them you may be mistaken.
Don't write anyone off completely. Interesting.
It's a masterclass in subtle social influence, right? Managing expectations, using momentum, leveraging social dynamics, leaving no stone unturned, all without ever making an aggressive demand or starting a fight.
It's fascinating how he systematically leverages human biases. The bandwagon effect, the desire not to be left out, even the surprising generosity of some outliers rather than just making direct, unadorned appeals.
It's about guiding people towards a desired decision, often making it feel like it was their idea rather than forcing them. Much smoother.
But sometimes, even the most elaborate attempts to understand human nature can spectacularly backfire, can't they? Leading to a major strategic misstep. The Edsel car naming disaster is a classic cautionary tale.
Oh, the Edsel. Yes.
Yeah.
Ford Special Products Division, they were determined to get the name right for this big new car launch.
So what did they do?
They hired research outfits, they canvassed sidewalk crowds with literally 2,000 potential names, asking people about free associations and opposites. Just tons of research.
Sounds exhaustive.
It was. Yet after all that effort, they found the results were totally inconclusive. They couldn't get a clear winner from the data.
And while they were stuck in that analysis paralysis,
They famously ignored the simple, direct, and intuitively logical suggestion from within the company. Just name the car after Edsel Ford, Henry Ford's son.
which they eventually did, but the name became synonymous with failure.
Exactly. It highlights how an over-reliance on complex data, sometimes maybe to the exclusion of common sense or the obvious emotional connection, can lead to significant missteps in influencing public perception. In this case, the fight was almost against overthinking itself, and overthinking won, costing Ford dearly.
A reminder that more data isn't always better data.
Right. Sometimes intuition or a simpler approach is best.
Now, on a more interpersonal level, especially for managing teams or collaborating, there's immense power in concepts like the 1-minute praising and 1-minute redirect.
From the one-minute manager concepts. Very practical.
Yeah, the idea is to actively catch people doing something right and give them a quick, specific 1-minute praising, especially for new tasks or when someone's trying something difficult.
Positive reinforcement, done well.
Right. And conversely, for mistakes, instead of some long, drawn-out lecture or public shaming.
Which just creates resentment.
Exactly. You use a 1-minute redirect, quickly, privately, constructively correct the specific issue, reaffirm the person's value, and get back on track.
This dual focus, clear positive reinforcement, and clear, timely, specific corrective feedback, delivered with care, but also directness, it dramatically enhances motivation and performance.
It's about shaping behavior proactively and gently, isn't it? Preventing small issues from festering and escalating into bigger conflicts down the line by addressing them quickly and constructively.
You create an environment where growth is encouraged through specific, actionable feedback, minimizing resentment and fostering trust. It avoids the need for bigger, more painful confrontations later.
And there's another fascinating psychological phenomenon that connects here. Blemishing leads to blossoming.
Right. This is quite counterintuitive, but really powerful.
Explain it.
It suggests that deliberately featuring mistakes or including minor negative information can actually have a profoundly persuasive impact in certain contexts, like online reviews or even marketing materials.
So showing flaws can be good. How does that work?
It makes the overall offering seem more authentic, more trustworthy. It can make the positive aspects seem even more credible because you're balancing them with minor, often insignificant flaws. It sort of disarms skepticism by showing a lack of impossible perfection, which human nature often finds more believable. Too good to be true is a real thing.
So acknowledging a small negative makes the positives shine brighter.
Exactly. A little bit of blemish makes the whole thing blossom.
So pulling this together for you, the listener, how deeply do you understand the unspoken motivations, the cognitive biases, the underlying needs of those you interact with, whether it's a client, a colleague, a boss, even a family member?
How can you use subtle persuasion, clear communication, maybe even strategic blemishing, and thoughtful structuring to guide outcomes rather than demanding them?
Thereby making conflict less likely, or maybe even entirely unnecessary. It's about being a psychological architect, understanding the materials you're working with, not just being a battering ram.
Well put.
Okay, now let's turn inward for our second to last section. 3.2, the importance of self-awareness and personal strategy.
This is foundational. Absolutely
Oh,
foundational.
the core idea here is that true strategic advantage, the kind we've been talking about, really begins internally with a deep, sometimes unflinching understanding of oneself, one's capabilities, and a consistent commitment to personal effectiveness. You really can't lead others effectively until you can lead yourself.
Peter Drucker, the management guru, he emphasized this constantly. He said, history's great achievers have always managed themselves.
Manage themselves. What does that mean in practice?
Yeah. It's not just a quaint observation. It's a foundational principle. It means actively developing yourself, strategically placing yourself where you can make the greatest contribution based on your strengths, and critically, knowing how and when to change your work or your approach as you evolve or circumstances change.
So it's about understanding your own operating system.
Deeply. Your strengths, your weaknesses, how you learn, how you work best, what your values are, under what conditions you perform optimally.
Drucker also highlighted something often overlooked, didn't he? The importance of understanding your fundamental work style. Are you a decision maker or as an advisor?
Yes. And he pointed out that a failure to recognize this can lead to significant struggles, especially in leadership roles.
How so?
Well, for instance, he observed that a highly effective number two person, someone who is an exceptional advisor, might fail catastrophically if promoted to the number one spot. Why? Because they can't ultimately accept the responsibility and perhaps the isolation of making the final decision. Their strength was in advising, not deciding.
So it's about knowing your true nature and playing precisely to those strengths, rather than trying to force yourself into a mold that just isn't yours. That avoids a lot of internal conflict and external failure.
Absolutely. What's also profoundly insightful, and again, often overlooked in day-to-day work, is Drucker's simple yet powerful advice about adapting your communication style, specifically to your audience, especially your boss.
Right, the reader versus listener boss example.
Exactly. Imagine an employee who's perfectly trained, maybe from a previous job, to write these detailed, comprehensive reports for a boss who loves to read, a reader boss.
Okay.
Now, if that employee then moves to a new job with a listener boss, someone who prefers to get information through conversation, through briefings, and they continue to just submit lengthy reports that go unread.
They're setting themselves up for failure, miscommunication waiting to happen.
Totally.
Yeah.
Simply due to a mismatch in communication style. This highlights the critical need to actively analyze how this boss performs. How do they absorb information best?
Yeah.
And then adapt your communication accordingly.
It demonstrates not just self-awareness, how do I like to communicate, but also crucial situational adaptability. How does this person need to receive information? That's a powerful strategic advantage in itself.
You're winning the communication battle by understanding and accommodating the other side's preferred method, rather than rigidly sticking to your own preferences and creating unnecessary friction.
Stephen Covey's enduring idea of proactivity also ties in beautifully here, doesn't it?
Oh, absolutely. Habit 1, be proactive. He famously noted that you can't talk your way out of problems you behave yourself into, meaning your actions create your reality.
So proactivity, in his framework, means recognizing that you possess the inherent power, the freedom to choose your response to circumstances. Even when external environmental pressures are overwhelmingly negative, you choose how you react.
It's about focusing your energy and effort on your circle of influence, those things you actually can control or impact in order to expand it over time, rather than passively being determined or dictated by external events swirling around in your larger circle of concern, which you can't control.
This fundamental commitment to personal responsibility, to self-mastery, it's absolutely central to avoiding unnecessary conflict, isn't it? By proactively shaping your responses and your environment where possible, you become the architect of your outcomes, rather than just a victim of circumstance.
You're taking control of your own ship.
Yeah.
And finally, from the classic Think and Grow Rich, there's that timeless advice to keep your own counsel.
Meaning?
It encourages us not to be too easily influenced by the opinions of others, especially negative or doubting ones. When you're putting principles like these into practice, striving for a goal, you must reach your own decisions and following them with conviction.
So trust your own judgment once you've done the work.
Right. Be highly selective with the advice you take. Choose only those advisors who are in complete sympathy and harmony with your purpose.
Why is that so important?
Because the source wisely warns that even close friends and relatives, sometimes despite their best intentions, can inadvertently handicap one through opinions and sometimes through ridicule, which can erode your resolve and confidence.
So, before you can strategically influence others, before you can build that unassailable position we talked about, you first have to master yourself. Understand your convictions, protect your inner resolve from undue external influence.
Know thyself. What are your strengths? Your preferred modes of operation? And how do you protect your convictions? Especially when the noise of the world gets loud and full of doubt. Self-awareness is the bedrock.
Well said. Okay, let's wrap up this deep dive with our final section, 3.3, cultivating an environment of winning without fighting.
Bringing it all together.
Yeah, the core idea here is that by proactively creating the right internal conditions, whether that's a culture of trust in a team, transparent feedback systems in an organization, or clear expectations in a relationship, you can actually prevent conflict from arising in the first place.
Or at least manage it constructively, fostering collective success and ultimately making those external battles far less frequent or maybe even entirely unnecessary because the internal system is healthy.
One of the most powerful concepts in this realm seems to be radical candor.
Yes, Kim Scott's framework, it's gained a lot of traction.
It basically encourages managers, and really anyone, to care personally while challenging directly. The book explains how avoiding telling people clearly and directly when their work isn't good enough.
Which often comes from a place of wanting to be nice.
Right. But it actually leads to far greater problems down the road than being perhaps momentarily uncomfortable but direct. It's a misguided sense of kindness that often fosters resentment, confusion, and ultimately mediocrity.
Instead, radical candor advocates creating a climate where managers provide specific, actionable feedback, both praise and criticism, and communicate necessary changes directly and clearly.
And then they encourage their direct reports to share this feedback approach with their own teams, creating a culture of open communication.
Exactly. This approach fosters continuous improvement and prevents those small, festering issues from escalating into larger, more destructive conflicts. It means addressing discomfort head-on, with clear, direct, but also kind feedback, rather than allowing problems to grow unchecked and become full-blown battles later.
The goal is open, honest communication to solve problems collaboratively, not confrontatively.
It really changes the dynamic from adversarial to collaborative problem solving. This approach is also mirrored nicely in the idea of blue ocean leadership.
Okay, that sounds familiar, like blue ocean strategy for markets.
Exactly. It takes that concept of creating uncontested market space and applies it internally to leadership itself. How do you create better leadership without direct confrontation or blame?
How does it work?
They use a process often involving a leadership fair. Here, as is canvases depicting current leadership activities, the good, the bad, the time-wasting are presented, often acknowledging that everyone is in the same boat. It removes the feeling of being singled out.
Creates a shared understanding of the current reality.
Right. The goal is then to collectively move towards agreed-upon-to-be leadership profiles, encouraging change by fostering that shared understanding and making individual leaders far more open to adapting because they don't feel personally attacked.
And coaching plays a role.
A huge role. Though often used least in traditional settings, the Source Notes coaching has a markedly positive impact here because it fosters dialogue, clarity, and commitment. It allows employees and leaders to experiment with new behaviors and rise to that challenge in a supportive way. It transforms potential resistance into genuine engagement and ownership.
Again, fostering change without direct confrontation. And finally, a really fundamental principle for preventing conflict, especially at the outset of any relationship or agreement, the win-win or no-deal approach.
From Covey again, right? Principle 4 of interpersonal leadership.
That's the one. It provides both parties with the absolute freedom, right up front, to walk away if a mutually beneficial solution simply cannot be found.
This is so critical because it proactively prevents parties from getting locked into long-term compromises that inevitably damage people and businesses, especially in emotionally charged contexts like family businesses or partnerships between friends.
Where emotional ties can lead to those detrimental lose-win scenarios where one party suffers in silence just to keep the peace, building resentment.
Exactly. By establishing a clear win-win or no-deal framework for the beginning, you create a system where success must be mutual, or the deal simply doesn't happen. It avoids the conflict and resentment that are inherent in unfair or one-sided arrangements down the line. It sets the right foundation.
So for you listening, this really asks, how can you actively build a culture around you, whether at work, in your business, or even at home, that naturally moves towards shared success, open communication, and mutual benefit?
How can you create systems and expectations that make winning together the default path, rather than resorting to destructive conflict when disagreements arise, allowing everyone involved to thrive?
So, wrapping up our deep dive today, we've explored how this idea of winning without fighting isn't really about avoiding challenges or pretending problems don't exist. Not at all.
No, it's much more strategic than that.
It's about strategically anticipating, positioning yourself effectively, and subtly influencing outcomes long before direct confrontation becomes necessary or even relevant.
We've seen it in Amazon's deep, patiently built moats,
Priceline's incredibly smart acquisitions,
Benjamin Franklin's psychologically astute, persuasive wisdom.
and even maybe unintentionally, the Washington Post's victory during that strike where their perceived value was challenged.
The core idea, truly threading through all of this, is that through a superior understanding of the environment, the market, the technology, the situation,
And a deep grasp of human psychology motivations, biases, communication styles.
and an unwavering commitment to one's own capabilities, values, and self-management, you can often render direct confrontation completely unnecessary.
The most powerful moves, it seems, are often the quietest ones, the most meticulously prepared, the ones that leverage, rather than forcefully oppose, the natural flow of events or human nature.
They make your victory look not just easy, but almost inevitable, a preordained outcome of your strategic brilliance and foresight. The fight was won before it began.
So, here's a final provocative thought for you to mull over. In a world that so often celebrates brute force, overt competition, and those dramatic head-on battles, what subtle, perhaps almost invisible strategic shifts could you make this week?
What small, quiet move could you initiate based on foresight and positioning to create an inevitable win for yourself, effectively making your opponents, or simply your greatest challenges, irrelevant to your ultimate success?
Think about it. What's that one strategic adjustment you could make that changes the entire game in your favor without ever having to throw a single punch?